A good evening, a very warm evening in the City of Gold. Here to the Sunday Times Connect discussion in partnership with Lucky Bean, introduced by Just Property franchisee Nikki Roussos. Now, I'm very excited this evening to be chatting about something that I'm quite curious about myself, not being an expert. We're very lucky to be joined this evening by a range of experts across the various fields that we're chatting about, but we're really talking specifically about first-time property buyers in what seems to be a sector, or rather an industry, a market full of opportunities. People are talking about the current economy is full of great opportunities for first-time buyers or seasoned buyers. But what does that really mean? What does that entail? It can be quite overwhelming if you are a first-time buyer. If you don't know what it means, this interest rate, that residual, that whatever it is, I'm glad that I'm not the one who's going to be telling you. We've got some extraordinary panelists who have joined us this evening to tell us all the things that we need to know. If you were interested, they're going to guide us through this panel discussion. And of course, if ever you've got questions, if there's something that you would like to know, there is an email address. And of course, you can always go and like the Lucky Bean Facebook page and email luckybean@just.property. So I'm going to begin with our initiates tonight, or rather I can say the force behind the event, Nikki Roussos, and a quick little bio, a little background about who's going to be guiding us through this experience. She's a strategist, a leader, an executive coach, facilitator, entrepreneur. I love this, perpetual student, and that's how you always stay young. And as well, of course, as founder of Lucky Bean, and passionate about property ownership, obviously, with all the various years that she's had in the industry, as well, of course, as making it possible for first-time buyers, making it a vehicle for empowerment, and making it something that you can create wealth, mind you. So I'm going to start with you, Nikki. Thank you so much for facilitating all of this and having us this evening. I would love to start with where it all began. As the founder of Lucky Bean, how did this initiative come about?
Thanks, Bunny, for that very nice introduction. A lot of what one picks up over time is sort of our subliminal messages that one hears. And for me, property ownership was one of those. My father would many, many times talk about how owning your own piece of land, owning your own property gives us a sense of self. He was an immigrant. He came here with very little, and he always aspired to buy property. He did eventually, I think, buy one property in South Africa only. But he always talked about the fact that it gives you a sense of self and it anchors you, and it's a very important aspect of one's self-esteem. So property ownership was always very important to me. And I do believe that property ownership's previously been quite inaccessible to a lot of people in this country. There aren't a lot of mentors. So I'm quite passionate about the subject. We started putting together small events aimed at first-time buyers and people that really want to learn about property ownership. And we realized that there was a lot of demand and a lot of interest, and people really wanted to know some quite basic things about property ownership. And that was an exciting thing for us because we believed that we could mentor and teach. So Lucky Bean's stated objective is to mentor, assist, and empower buyers to eventually, or prospective buyers, aspiring buyers to eventually own their own properties. And this hour is just a real introduction, a tiny slice of what one should know about before one ventures into the property game. But we really want to whet people's appetite. We want to engage. We want you to become part of the Lucky Bean community so that we can help you along the way and teach you and make it far less intimidating and empower you to make your first purchase.
So you've mentioned the basics of property, and as somebody who's not an expert, those basics can sometimes be quite confounding. Tell us a little bit about what are the factors that one needs to consider when buying a home.
Bunny, there are a lot of factors, and they're very personal. Firstly, why do you want to buy a property is an important factor. Is it an investment? Is it for a family? Is it for a single person? All those factors. Does it have to be closely located to work? So the location of the property is important. Do you want to keep it for 5 years, or do you want to keep it for 20 years? Because that's also going to make a difference. What are the monthly costs, the levies, the rates? Because some properties look amazing, but then they've got very, very high levies, and that's really crippling and over time. Municipal plans for the area. Are there roads coming close by? What is the age of the property? If it's an older property, it might require maintenance. If you're buying from a developer, you don't pay transfer fees, so that's a factor that you may want to consider. The very obvious point is, what is your budget and what can you afford? There are many exciting things going on right now, like the government has a product called FLISP, which Marlies might talk about later. But deciding whether you qualify for that or understanding whether you qualify for the government grant, all these factors need to be considered. A lot of interesting considerations, perhaps how quickly the property may grow over time based on whether the crowd train's coming around the corner or whether there's a shopping centre being built across the road. All these factors influence your property purchase.
Sometimes when you are thinking about getting into the property game, I suppose sometimes the advice that you have, you were talking about subliminal messaging, can be anecdotal. It will be what your family went through, what a friend went through. How can a buyer be more informed and more empowered when they're looking towards that property purchase? Where should they start?
But you're really right about that. And the anecdotal stuff is not necessarily what you want to know and what's going to take you places. Mm. So what's very important is to build a team around you. You'll be surprised. Buyers will be surprised to know that most of us don't charge for our services. It's the conveyancers don't charge for their services before the property is bought. The bond originators don't charge for their services. These are all terms we'll talk about later in the discussion. We as Lucky Bean don't charge for our services for advice. So you could build a team around you and become far more empowered, ask all your questions up front, become far more empowered before you even start looking for a property. Understand what you're up against.
Now, you've really surprised me. I didn't actually know that a lot of those things come free of charge, not until, the ink is dry, as it were. But tell us a little bit, before we get into those various roles of those, the members of the team that you would want on your side. But talk us through why property is a good investment. Again, with the anecdotal stuff, if you're living in the house, it's going to be a liability, blah, blah, blah. There are a lot of purveyant kind of beliefs or thoughts about property as an investment, but could you tell us why you think property is a good investment?
Well, of course, without sounding biased, which of course I am, I'm extremely passionate about property. It's a fantastic investment in that if you want to buy and purchase an asset for 600,000 or $1 million, you only have to put down a small deposit. Whereas if you wanted to buy an asset base of shares or anything else, you have to put down the full 600,000 or the $1 million. With the property, you pay it off over time, and you can sometimes pay your property off over 20 years. Also, your property increases over time. If you bought a property for investment purposes, if it wasn't your home, your tenant pays off your property. Or pays off your bond. So there are many reasons why, mostly just that you just don't have to put the full amount down, and you end up with an asset of 600,000 or $1 million, or actually 1.2 or whatever it has grown to over time, and you only put down your deposit and paid off the rest monthly.
Stunning. Thank you for laying down that kind of groundwork for those of us who don't know what's going on. But moving to a more seasoned buyer, or rather to the more seasoned buyer, I'm very excited to introduce our second panelist this evening, Mary Bormela. And I can tell you a little bit about Mary, who, I mean, we could be here all night if I read the entire list here, but I can tell you that with a wide range of experience as an executive and on the board of many companies, including Prime Media, the First Rand Group, Metrofiles Holdings, Ascendus, to name but a few. Mary Bormela is the CEO of Mine Workers Investment Company, and many, many years, well over a decade, 15 years, in fact, you can correct me, as a property investor. I'm going to welcome you, Mary. I haven't missed anything, have I? Well, I suppose I did. Don't forget to unmute yourself.
Thank you, Barney. I'm not sure about being seasoned, but yes, it's a side thing that I do, and I enjoy being in the property space.
So, tell us about your motivation for your first property buy. I think at this point, yes, definitely seasoned. I give you that a moniker as a seasoned buyer. 15 years down the line, why did you start?
So funny part is that my first property was not our home. At the time, my husband in our earlier years moved around quite a bit. So we moved from town to town just as we were building up our careers. And we ended up in the Northern Cape, and we were living in a company rented or provided accommodation, and at no charge. And we did have a bit of surplus cash at the time. And our decision was to invest that cash into property simply because, one, it's not liquid. And secondly, when you've got excess cash, you do get, tempted to use it for consumables time and again. And for that reason, we thought, it would be better spent into property where you can't actually draw that money in the short term versus just keeping that money. So it was an investment, and understanding that property is a long-term investment game.
In terms of, I'm going to come back to this, the concept of property as an investment. What would you give as the reasons for buying versus renting? You mentioned that the first house that you purchased wasn't even a home that you lived in. Talk us through the thinking between buying and renting, and the kind of pros and cons and the reasons someone might choose one over the other.
For me, I think buying your own home especially is number one, because when you rent, you're actually paying off somebody else's bond. I think Nikki touched on that earlier. And over time, what you find is with rentals will appreciate year on year, whether it be by inflation or so on, unless if it's a year like this year where the markets are a bit depressed. But under norm, your property rentals do go up year on year, versus when you've got a bond and you're paying off your bond normally remains more or less flat. It might vary a little bit with the interest rates. And so what actually happens is that over time, you find that the rental of your property actually starts to exceed your bond. So it doesn't make sense actually then that you are renting when you don't have a property. You'd rather buy and pay off your bond. And I think especially for professionals or the younger people, as you build up your career, you also start earning more, which means that with time, you'll be able to afford, I suppose, that space. It gives you that latitude, because now you've got, I suppose, a bit of gap between the bond that you might have taken 5 years ago and what you'd be earning at that time. And I think the last thing also, the biggest advantage for me is that property does build value over time. And normally the first property that you buy as a home will never be your last. Because if you're still young and you're going to get married and you have kids, you probably need a bigger accommodation. So with time, as the properties appreciate in the normal market, you would then build up some equity. So that means that for your next home, you've got an asset that you can sell and use that money as a deposit for your next property. And I think the last thing, obviously, the nice thing about buying versus renting, when you own a property, you can customize it to fit your lifestyle, to enjoy it more. When you're renting, landlords will tell you not to even hang paintings on the wall sometimes, and to draw nails into that. So there are a lot of advantages for me to buying versus renting.
You mentioned I'm a bit of a visual person, so as you're talking about this interest rate and that cost, I've got a little timeline. I'm trying to calculate in my head. When is the right time? You're speaking about stages. The first house that you buy will not be the last, not likely. But when is the best time in someone's life? Is there an ideal time to be buying property?
I suppose the ideal time is always today. I don't believe that you are young enough to own a property. Personally, the younger you are, the better. Because if, for example, you are going to pay that bond over 20 years, then it means that if you bought your first property at the age of 20, 25, you would have finished paying it off by the time you're 45. I don't think one would want to go into their retirement years whilst paying a bond. And in the low interest rate market that we have currently, that's really ideal for people to be looking for properties to buy. Although I'm not a specialist on valuations, but I also know that the markets are quite depressed at this stage. And therefore, in terms of finding good bargains, I think this is the right time. Unfortunately, people have lost jobs, and there might be more properties on the market versus versus demand, which therefore means that you can negotiate prices down and get a property at a good price. And for as long as the interest rates remain low, it does also provide one with that opportunity to afford maybe a property of a higher price.
So basically, no time like the present.
No time like.
If I may ask, over your tenure as a property investor, if I could, it's a little bit of a philosophical question, but if you could give us kind of cherry pick some advice over, the time that you've been an investor, the biggest lessons that you've learned, what advice could you give?
Sure, I'd probably write a book. I think what is important in our discussion is that as a first-time buyer, it's important that one gets the right advice and the right specialists around them to get to know what are the things to look out for and what other things to buy. For example, our first property that we bought was actually in Bloemfontein, and at the time when we decided to sell that property, we got to find out that there was the unit, it was in a block of flats, and the unit had a garage. And we got to find out that that garage was actually not in the original plans that were submitted to the municipality. So it made it quite difficult for us to sell that property. I had 3 deals fall through simply because of that. And we had to then find an architect who could now redraw the plans and put the garage in and relaunch. So it took us an additional 3 months before we could sell that property. And if I had known, I suppose when I bought the property, to ask for the plans for the complex, because it was quite a small complex, it would have been a good thing, but I didn't know at the time. I think so. You learn those kind of things. You learn about location, but as an investor versus, I suppose, buying it for yourself as well, you also need to understand the reasons why you're buying the property. If you're buying property for capital appreciation, or whether you're buying the property for income generation, and maybe then your strategy will be different in terms of where you buy, how you buy, and who your tenants are. And with me, because this is something that I do on the side and not as a full-time job, I normally use letting agents to help me with the screening of tenants and making sure. Otherwise, you can find yourself with problems if you have tenants, and those tenants don't pay and you need to evict them, and the eviction process is quite long. So I think it's just those type of lessons that I've learned along the way. But bottom line for me about property is what they say: location, location, location. Whether you're buying it for yourself, or whether you're buying it as an investment property, because ultimately you would like to see your property appreciate in value. And for that reason, it's important, there's a saying that says you'd rather buy the smallest house in a good suburb or in a good street versus buying the biggest house in a suburb or in a street that's got bad neighbors.
Thank you very much for your insights there, Mary. From my perspective, I'd only ever heard location, anecdotally from the TV. So it's better to hear from somebody who knows what they're talking about. Another thing that I'm extremely curious about is, which is great that we're here to chat these things through, is what exactly is a conveyancer? So I'm moving now to Cord van Deerfinted, who is the partner and director at Van Deerfinted and Van Deerfinted Incorporated, a property real estate department. And really just to chat through with somebody who knows what he's talking about, an admitted attorney at the High Court, thank you very much, of South Africa, notary and conveyancer, having acted for financial institutions, having acted for leading developers and numerous other clients in the industry. Good evening, and thank you for joining us. Cord, tell me, and at the risk of sounding quite silly, what is the role of a conveyancer in the process, and why do you need a conveyancer, and what is even? Please help me.
Evening, Penny. Hi, Mary, Nikki, and all Marlies and all the listeners or webinar attendees. So yes, a conveyancer, firstly, we are attorneys, we lawyers. So we practice in the law, but the law of property. It's to be a conveyancer, you firstly have to be qualified or have to do your exams and all of that. And there's a special exam that you write to be a conveyancer. It's just not a normal attorney. We specialize in property law, which is the transfer of ownership from the sellers to the purchasers. Also in the registration of mortgage bonds, which Marlies does. So when the bank does give you finance, we're involved in that whole process. For the listeners or attendees out there that want to go into developments, we assist in that as well. Going through the whole planning of your whole development, acquiring the land, going through the whole process of rezoning and all of that. And just assisting through the whole property process, as Nikki said earlier, and Mary said as well, there are so many pitfalls in acquiring a property or selling a property. If you don't have the proper legal advice before going into it, it can become a really stressful acquisition instead of a happy acquisition. That's where we come in. And correctly, as Nikki said as well, we don't charge for those costs upfront. If you phone us, I think Nikki and them said they will give our email addresses from Monday, we will go out. So you're more than welcome to contact us. I've got a passion as well for training with property people that want to buy. We've linked up with some people that are buying properties that we are training with them in acquiring those properties. So I've got a passion for it. I love what I do. Conveyancing is property ownership from seller to purchaser. Yeah, that's what we do, and we are doing it.
Stunning. So this is the perhaps where some of the confusion came in, for free, but not really. It's free on the upfront end. So tell us a little bit about who would appoint the conveyancer. If I am interested in the various aspects and the various entry points that you've discussed, wow, where does a conveyancer come from? Who appoints it? Do I get to choose my own?
Good question. In terms of the Law Society rules, the seller in all the provinces except KwaZulu-Natal, for the attorneys out there, the seller appoints the conveyancer. In KwaZulu-Natal, the purchaser appoints. But I think in the last 20 years, those rules are old rules. In the last 20 years, it's changed where it sort of becomes a negotiation. If the purchaser has worked with a conveyancer before, and we find that a lot, like Mary is an investor, she would most probably have a conveyancer that she'd be working with and would stick with him because he understands the way she wants to work, what she's investing in. But from our side, and I think from Nikki's side, the Just Property Group side as well, we worked very closely with them. And Nikki's a very strict and hard-working woman. She quickly lets us know if the deal's not running smoothly. So I think a lot of the time it comes from the agent working with the purchaser, working with the seller, and them referring attorneys or attorneys that they can use. But also, we pride ourselves in the service that we give. So it's a long-term negotiable agreement that you have with purchasers. The next time he's going to sell is in 7 years, or in 8 years, or in 10 years. And if we give him good service in his first time a property that he's purchased, as we are now with some of the first-time buyers on, he's going to come back and use us again and again and again. And I think that is what we pride ourselves in, is good service, good communication, and just a happy experience. It's a stressful acquisition when you're buying property. It's probably your most important acquisition that you'll make in all your life. And buying your first, second, third property must be a good experience. And if we as conveyancers can make that a good experience, so much the better. And we work as a team with Just Property, Marlies and them. So yeah, hopefully people that will buy through us will come back again.
I'm certain they will. I'm talking about the stress of property purchasing and the whole experience. I've recently seen on the internet an advert for stomach cramps. They were using property, signing the paper, signing on the dotted line for property as the really stressful event that you need their product for. So I can definitely see that it's good to have a really varied members in your team. Lastly, before I let you go, tell me about what are the questions. I'm kind of asking for the answers to the exam here, but what are the questions that one should be asking a conveyancer once you're sitting in front of one?
Firstly, I think for first-time buyers out there, the cost involved in acquisition. We spoke about this earlier, and we find time and time again that purchasers are not informed in what the costs are. There are costs involved. Let's make no mistake. There are transfer costs, which is the conveyancer's costs. There is transfer duty, which goes to SARS, South African Revenue Services. And there's mortgage bond costs, which Marlies works with. So there are costs involved. Let's make no mistake. And the more purchasers are informed in what the costs are, the quicker they can pay, the quicker the transaction moves ahead. Things like suspensive conditions. What are the conditions in me acquiring this property? And for the buyers out there, do not be scared in putting your pen to paper. Suspensive conditions means that contract is suspended until your bond is approved for what you've applied. So it doesn't mean if you put your pen to paper for 700,000 and you apply for a bond for 700,000, you have to go buy that property, if it makes sense. You apply with the banks through Marlies and them. You apply. If your bond is not approved for what you've applied for, there's no obligation on you to proceed with that offer to purchase. Don't be scared. As Mary said, it's a big transaction. Don't be scared. Enter the market. The market's good. Suspensive conditions. If your finance is not approved for what you've applied, then obviously you don't have to go into that contract. We find that with a lot of first-time buyers, Bunny, where they say, we were so scared in buying this property. Once the finance was approved, we understand now what the costs are, what the process are. It becomes such an easier transaction. It's enjoyable. And once you have your own house and you're not renting, big difference. It's your property. It's your investment. You paying your own bond. Coming back to it, I made a note of it. Interest rates, unfortunately, did not come down today. It stayed the same. I think 90% it should come down November. But you're paying on R1 million bond 9,375 rands on that bond. But look at other things. That's the bond. Look at other things, levies, rates and taxes, insurance, all those things. Like a good budget. If you're paying for that and your costs are 11 or 12,000, where are you going to be buying? 10 years ago, if you were paying 12,000 rands, everything all included on R1 million house, you would have been very happy. So don't be scared, guys. Invest, go buy. The market's been buoyant. The Reserve Bank's been good to us and the banks have been good to us. So, yeah.
Well, it's good to know that the opportunities do exist. So thank you so much for your insights on that. And perhaps because I was just too curious about this conveyancer word, I've skipped over the costs. So I must come back to you, Marlies Moller. We're going to be chatting about another thing that I don't know, another terminology that I need you to elucidate on is bond originator. But before I ask my questions, just a quick background on My Home Loans, a dynamic team of individuals that provide exceptional service by tailor-making deals to clients' requirements. It's 13 years in the game, specifically with My Home Loans, and yes, a growing team from Bloem, and now in the big city of Gold. Is that correct, Marlies?
Yes, that's correct. So I moved here about a year and a half, maybe 2 years. So I'm still finding my feet, but I'm enjoying it. It's a big city. It's a fast-growing city, fast-paced, but yeah, it's good.
Yes. So fast-paced, indeed. There's I could not even correct you on that. Joburg is the city of the rat race. We're all chasing those nuggets of gold. So, talking about the terminology, a bond originator, Cor was alluding to all the costs that one can incur or that are involved with the purchasing of property. First of all, what is a bond originator, and what benefit does this service offer to a buyer?
Well, a bond originator is the middleman basically for the buyer and the bank, which we will do all the paperwork, we will do all the motivations towards the bank, and there is no additional costs basically. So it's a free of charge. I know a few years ago they said that the cost is included in your bond, which it's not. It's a total free service. If the deal doesn't go through, we don't get paid, but we make sure the deals go through. So it's the middleman. Just we've got all the electronically devices in our office where we can submit the applications to the bonds, to the banks, do the necessary. So you don't even have to go and stand in a queue. You just submit all your documents via email, or if you need, we just do everything for you without any costs involved.
Stunning. Again, this magic word of no costs involved. But talk me through the importance of your credit score when you're applying for a bond. I know that it's one of those, again, anecdotal stuff about your financial health, that you need a credit score, you need this, you need that debt to be able to get that debt. Talk us through the role of the credit score when applying for a bond.
Yes, basically. So I don't know if you heard that if you don't have any debt, you can't get any debt. So it's important to accrue debt which is responsible, like a credit card, maybe a personal loan or a clothing account. But your score is basically your footprint to what the bank will look at and advise and see, is it a good client? Is it not a good client? And usually with a good score, you start off by 620 if you know of RTC and credit checks, and then you can build on it. Scoring is not just how you pay your accounts, it's also where you live, how long you've been staying there. Are you regularly changing jobs? Are you regularly applying for personal loans or cash loans? I mean, it's things that's influencing your scoring, that the bank sees that you are responsible or you're not. If you're paying on time, are you paying late? Mostly these days we can do everything electronically, so there is no reason to pay late. And are you paying what you need to pay, the amount owing to settle your debt? And then an interesting thing that I've learned, that is spending about 15% of your debt. So if you've got limits that you can only use 15%, which is a good start. So don't spend your credit card or max it out or go and blow your clothing account. Buy and pay. Skip a few months without buying clothing and show the bank, look, I can pay my accounts. If I've got 10 Rand, I know how to use 10 Rand and not just spend 50 Rand because I've got the credit for it. Very responsible with the scoring. That's how the bank will approve or will counter offer or will decline your deal. So that's very important.
I am learning so much this evening. I had never considered not buying clothes for a couple of months. Never crossed my mind. But now that I know that it affects your overall credit score, it's good to know how certain behaviors are going to affect your future, and in quite a big way. So how will I know whether or not I've qualified for a bond? How do I know how much I qualify for? If, let's say, I think I've got a fantastic credit score, how will I know how much I'm worth?
Oh, Bonnie, that's easy. So with us, we do it both ways. The bank uses 30% of your income, joint or single. So let's say you've earned 30,000 Rand, you qualify for, let's say, 1 million. But for us, we do it both ways. And I think Paul touched on it, budget. Budget is important. So we'll say, look, you qualify for roughly about 1 million, but let's go into your expenses. Let's go into that scoring. Let's go and see what is it that you spend your money on so that you will have a surplus to pay your monthly bond, as well as if the interest rate goes up, what's going to happen? It's not just your bonds going up, your credit card is going up, your personal loans going up, everything is going up. And you still need to have a surplus of between 2,000 and 3,000 Rand. And usually we will send a detailed email to the client to say, well, look, this is where we are. You qualify for 2 million, but because you've got a car and you've got personal loans, you've got all these debts, you might go and look for something more like 1.5. And also ask them if they agree. Because, I mean, if you see what you spend your money on, you usually tend to say, okay, now I know where to either start paying more towards so that I can release more cash and buy the property that I want, the 2 million property. So we do it not only the 30% of gross incomes, we look at what your expenses are, and then we'll advise the clients accordingly to say, well, look, do you agree? We think about 1.5. If you're happy and the interest rates, then you should be fine.
Okay. So what then is the process of obtaining a home loan? Kind of walk me through the step by step. I reckon now that I have abstained for enough months from clothing buying, I reckon I've managed my debt well enough, and I'm now looking at purchasing, or rather applying for a home loan. What is the process?
Well, I think the first thing is a pre-approval. That's basically where you start to see how much you qualify for. As soon as you're comfortable with what your repayment will be, as well as what the transfer and the bond fees will be, I just want to touch quickly, I didn't mention it, for first-time buyers, Standard Bank are offering a cost-inclusive bond up until 1.8. So we make sure that the client knows up until 1.8 what the cost-inclusive will be. So if you're happy with what you qualify for, you'll have to go and look for a property. As soon as you found a property, you spoke to Nikki and them, come back with the signed offer to purchase. From there, we'll start the process, asking the client to send pay slips, bank statements, copy of IDs, get the process started. And then we've got a team which do the application online. So everything that you send to us goes directly to the bank. We are linked to them. We don't have to go via other channels. We can phone them directly, follow up your process to make sure that your application is moving forward. So it doesn't get stuck, or you have to phone a call center and you speak to 3 different people just to find out that your application is being declined. So for us, we can follow that same a line directly to them, follow up and find out why is it decline, and if it's declined on some or other simple reason, how can we motivate it? So we, with the 13-year experience, we know where we can either ask to say, look, can we not move the client, or if sometimes the interest rates are higher because of the risk that's involved. But we do basically everything for the client, and not just the buyer. Also, I think the seller must remember that when you sign an offer, make sure that your your buyer is pre-approved. Make sure, do ask that question to say, well, the client that's buying my property, do they know the pros and cons? Have they been pre-approved? Go through that process with them as well. So it's not just for the buyers. It's something that the seller also needs to look at, I think.
Wonderful. Thank you so much, Marlies,
Thanks,
for
Bonnie.
elucidating for us on the process of home loans. Marlies Moller from My Home Loans. Before, it looks like we've still got a little bit of time, so we're going to address some questions. But if we perhaps don't get to all of the questions, we've got quite a few coming through. Thank you so much for sending those through. Nikki, will you let us know if we perhaps don't get to everybody's questions, where they can touch base with Lucky Bean and touch base with your incredible team of professionals?
So Lucky Bean, what we've done is we've positioned ourselves as the central point so that all the questions, all your requirements, we're wanting to make things much easier for you to buy a property. And just to answer a question of earlier that Mary answered as well, is when is the right time to buy a property? The time is now. The reason why the time is now as well is that the sooner you buy, the sooner you pay off your property. But what's more relevant right now is interest rates are at their lowest for over 50 years. There's rumor that they may drop even. Property prices are strangely also at their lowest for other reasons. And that combination is a perfect combination for buyers. You're just paying far less for your property all round. And also, it's human nature in a way to sort of not really know how much one spends. And we tend, as Bunny mentioned just now, to squander on clothes or whatever it is. And in 5 years' time, you haven't really got anything to show for it, right?
Yeah.
And with a property, you're going to be paying off your bond and eventually own your property. And in the meantime, you can renovate and paint your wall pink and do whatever you like to the property. So it does make a huge difference to own your own property. And we really would like to encourage buyers to come into the market now. So Lucky Bean is your central point where we will sort of help answer all your questions. We're going to run courses. We will send you a booklet as soon as you've opted in to receive more information. We really encourage you to do that because, well, our little booklet and this session is just really an introduction to property ownership. And over time, we'll be running courses that you can plug into so that we can really sit and talk about the nitty-gritty of each aspect of buying property so that you can really feel at the end of 5 or 6 weeks that you know what you want to do and which direction you want to go in. So yeah, I think it would be great if we can answer some questions now, Bunny, because I believe they are streaming through.
Yes, there are. I'm one of those people, as I said, if I don't even know to stop spending on clothes, there's plenty to ask, and I'm glad that everybody that's joined us this evening is participating. So thank you. One of the first questions that came through is, are there different types of bonds? If so, I've been advised to take out an access bond. Is this recommended? I don't know who would like to take this question.
Marlies is the right person.
Yes, yeah. Look, it's a no cost involved added loan to your bond. So you'll get your capital side and you'll get your flexi side. So it's something that we apply automatically. We don't ask the client usually if you want something like it. We just add it because it's there for you to do. The thing that you must remember with a flexi bond, it's like a savings account on your bond. So it depends on what you want to do. If you want to pay your bond quicker, so you'll pay it in your capital side. If you've got funds available, then you just pay it into your flexi and it will be available. So yes, it is advisable. It's a little savings account on the side that you can use to deposit money into and transfer money out of it. But depending on what you want to do, if you want to pay your bond quicker, then I'll just say put everything in the capital side. if you want to save in the flexi. But it is available. It is there. It's a good product to, like I say, we just apply for it. We don't even ask.
But you see, there again, it's so important to spend time. And even there, I can hear terminology that maybe a layman is going to be intimidated by. And that's something that I'm so conscious of. So it's a matter of really spending time with us and understanding what capital means. Because that sounds scary to me. I mean, what is capital? Okay, so capital means the value of the property that you're buying. Really, but we need to sort of lay it all out for you so that you can see if you're buying a property for 600,000 over 20 years, how that payment goes off, because there's also a big contribution of your bond payment that goes to interest. So you might have the opportunity to pay your bond off quicker and plug in maybe an extra 10,000 Rand every now and again if you get a bonus, and then that brings your bond repayment time period down substantially. Or alternatively, whichever way you decide to go, you keep your bond repayment as 20 years, but you reduce the amount that you're paying per month. So it's very, very useful to spend time understanding your options with that type of question.
Staying on the money train, another question is asking about whether or not it's possible to purchase a property without a deposit. And I know earlier on, Nikki, you touched on, the purchasing of an asset with only a little deposit amount, but is it possible for you to do so without? Can you apply for a total home loan, as it were? I know between Marlies and Nikki, you can answer that.
Yeah, totally. No, look, with the lockdown, everybody was like, the bank's policy's gone a little bit stricter, but we do. Every day we apply for 100% bonds and even 105% bonds. Like I mentioned, that Standard Bank is currently the leading bank for me when it comes to first-time buyers, where they will look at 105% bonds. So you get your 100%. And a little bit of extra to help with the bond and the transfer fees. And that's up until 1.8, where ABSA also does, but only up to 1.5 million. And then you have to have a qualification honors degree or NQF8. So they're also on board, but mostly for the professional type of clients. And then Investec, I think they also add a bit like 25,000 Rand towards your bond. So depending on your scoring as well, so it's not because you're just a first-time client you qualify for it. Your scoring is also important. So how you spend your ways, everything like that, will help you to qualify for that 100% and even a little bit more.
Okay. Another interesting one, and I think this might be for Cord. The question here is, if a developer initially sells an off-the-plan property as full title and later informs you that the property has changed to a sectional title at the same price as the full title, would it be correct to expect a difference in price for the same property with a different / changed title? If I'm honest, I don't even know. I don't even know if the question is complete. So it sounds as if they're asking if it was sold as one thing, it now changes to another thing. Is the price the same, even though there's a switch over?
To be honest, that's such a long question. I think we could spend an hour on it.
Right.
Firstly, if you're buying into a development and you're buying into sectional title, it's a total different structure of ownership, total different title deed, total different financing that the banks will do on that side. So once the municipality or the local authorities approves that development, they will approve it either as full title, which means earth 1, 2, 3, 4, 5, 6, whatever. And if it's sectional title, it will go into unit 1, 2, 3, 4, 5, section 1, 2, 3, 4, 5. So for the developer to do that change very quickly like that and tell you bought sectional or freehold, full title, and you're into sectional title now, that change will be very difficult for that developer to force you into the transaction. So if that does happen with any of the attendees out there, it's very difficult because you've been promised that the development's been full title Earth 1, 2, 3. If they now change it to section 1, 2, 3, you can easily get out of it. If you agree to proceed with the developer, you will definitely have negotiating power and tell them, my bond's been approved for 2 million or 1 million or whatever the case may be, but during that, I don't want to be part of a sectional title development, because once you go into sectional title, you're part of a body corporate, which changes the whole concept from freehold meaning I own the earth and I don't have to be part of a body corporate. If you go down into that road where you are sectional title, you form part of a body corporate, or sometimes what we find is, I think what the attorney might have been referring to is Homeowners Association, HOA. So HOA works a little bit different to sectional title, but it's still, you can't promise somebody freehold and then down the road go change it to sectional title or Homeowners Association, because once you fall into those other two categories, sectional title, homeowners, you become part of a group of people. If the HOA, which is a non-profit company, if that falls, you as owner are liable for some of the debts of that company. If the sectional title falls, you are part of the body corporate and you are jointly and severally liable for debt. So be very careful. Freehold, very nice. Body corporate, HOA has its own benefits, but its own risks as well. So if a developer comes and says to you, it's changed to HOA or sectional title, weigh up your concepts, or if that's the right word. Contact us, contact Nikki. We'd be more than welcome to advise you on it, but be careful of where you're buying yourself into, because once you're in, you can't get back again.
Yeah, it doesn't sound like a good thing, the moving of the goalposts, but thank you so much, Cord, for your insights on that. And we are rearing up to the end of our time together. I must say that I've learned quite a lot this evening from you all, from your wealth of information, your wealth of experience. Unfortunately, we can't get to all the questions, but of course, you can always send an email to luckybean@just.property for more emails, for emails and also for information. There's lots of really cool things that you can get. There's the free booklet that Nikki spoke about. There are events and other content that you can find on the Lucky Bean Facebook page as well. So make sure that you like and follow on that particular page. I think it is with that it's time for me to say thank you so much to Marlies Muller of My Home Loans, to Mary Bormela, the CEO of Mine Workers Investment Company, Cord van Deventer of Van Deventer Attorneys and Conveyancers, and of course the pièce de résistance, the lady who's put it all together for us, franchisee of Just Property, Nikki Roussos. Thank you so much all for your time this evening. The first of many, I'm certain, with the Sunday Times Connect discussion in partnership with Lucky Bean, introduced by Just Property franchisee Nikki Roussos. Thank you so much for all of your time.